So, welcome to the show. I am your host, Marcel, known as the Wealth Mentor, and this is Wealthy Sibling. What is our goal here? Everyone who listens, we are on a journey, all of you, to change our family's money story. And honoring that we are on our road to 100. This is episode 25. I really wanted to get into the nit and gritty of one of the main things that I actually do, right? We talk about concepts of wealth. We talk about, the intricacies of business and, how these people became wealthy. But let's talk about stocks. Let's talk about investing for real. Because that's what I do. I am a investor, right? And the main thing I do is trade and start building onto portfolios. I opened up a Roth IRA this year with a tax return. Yes, I try to drop gems for you, but let's get into it. And trading and investing are two different things. I recently had a brother call me up and ask me. He was like, Marcel, bro, I know that you do this and you've been doing this for a while, and you read books and put your money where your mouth is, like sat there and watched the chart on the hourly, on have to go back like a month to see what the monthly trend is using your moving averages. So 72, I think 200, and there's a four somewhere in there. But and I got that from my mentors, right? So all these things I put into practice. I have Your mentor has mentors, right? uh but trading in this economy is different, bro. Like, trading in this economy is mad different, bro. And you gotta understand why the markets are volatile now. The globally and how traders and investors should respond and how we are responding. We adjust now. One thing I've added to my repertoire is really adjusting in the current. If I want to create cash flow as a trader, I'm adjusting to if I'm doing options in my puts and calls. So let's get into it, because if we talking about investing, we talking about trading. This your first time hearing me, listen to the show. I'm gonna give you a quick 101, right, on stock market trading and investing. So when you hear me say I'm adjusting to the trends of the global market or the U.S. market, right now we are in what's called a bear market. A bear market is a downtrend market. Bear stands for down, bull stands for up, as far as terminology, right? That means that if you ever hear, if I like, I would get up in the morning faithfully and turn on Squawk on the Street. And us traders and investors know on CNBC, Squawk on the Street comes on an open bell, and they would go through their projections of at least the day and possibly like the week's outcome of, like, hey, this is what's going on in the market. These are the movers in tech. These are the movers in commodities. These are movers in healthcare. And they run through it, right? And when I say I'm adjusting in the options field, because I trade options, right? Practice future trade options. So when I say I put money in and I flipped it, these is from options. And by the summer, God gives me the will through trading. We're gonna have another leverage when it goes put down money in the futures, right? But that's beside the point. So getting back to the options thing. So when I say I'm adjusting for the current market, this market is looking bear as a majority, depending on what stocks you in. I have to say that it's looking bear as a majority, but also depending on what stocks you're in, because we are in a global dismay. World wars are happening. I have to be honest with you, can't sugarcoat it. Uh, the war with the Middle East, in a Middle Eastern country, Iran, and all those other things. Like these things are creating uncertainty. And when you're creating uncertainty in the market, people pull back. It's like, hey, we're not having the normal influx people are talking about. Tariffs again, and the world is making an adjustment because the money ain't flowing like normal. And when the money ain't flowing like normal, everybody adjusts, from hedge funds to billionaires. Everybody are like, all right, what we talking about and what type of economy are we going to walk into, and how do we have to adjust depending upon where we sit, right? And where we sit is very important. So yeah, that's what I mean when I say adjusted, right? All right. So the market right now is confused. It's confusing for a lot of people, right? Some people are making money trading, very much so, right? If you've been in ExxonMobil, to be honest, from the past month, you've been good. Stay true. You believed, and even then, it was an influx. So if you go back and let's just do it. Let's just do it. I'm gonna pull it up for you. I'm gonna use a open source resource, that way we don't have to go into my account. So we're gonna do Yahoo Finance. We're gonna do Yahoo Finance, and we're gonna pull it up. All right, so we're gonna Yahoo Finance, and I'm gonna screen share for you right now. So you guys, if you are listening, I'm gonna talk through this. Like, so if you're listening audio, or you're not looking at the screen, shout out to YouTube. I'm going to talk through this as much as I can. And I'm going to give you two type of breakdowns, right? So, Exxon, right? Exxon Mobil is the mobile gas company, or oil, right? Oil refineries, everything in the oil industry, what is impact by oil and otherwise, right? So here's an example. Okay, so the last open trading day, it closed at a high of 151, and on the screen, let me see if you should be able to see it. Okay, yeah, let me add this. I didn't even add it up there. All right. So, ExxonMobil, right? Mobile gas station, but it's a commodity under the oil industry, oil stock, right? Okay, so close of trading day, which is Monday through Friday, whatever your time zone is. The high was 50.51. That's what it says on Yahoo Finance on the screen for the ticker. The ticker for Exxon is XOM. And overnight, which means that people who have the ability to have 24-hour access to trading and just the overall influx of money that's going into the stock, oil has raised up $5 or so. Literally, as we look at it at the time of shooting this, it is $4.80 something cent, right? That's overnight. That means outside of trading out, normal trading hours, the stock has raised $4. Okay. But that is for the last trading day. Now, if you go back, let's go back. What is this? No, let's go back 30 days. Because this is the difference. All right. So let's do 6 months, and let's do January, because I remember looking at this around, yep. So January, when things were in flux, and depending upon what work industry you in, everything was in flux. ExxonMobil was in 128, and let me see. Okay, I'm so glad they let you do will they let you do technicals, indicators, candles? Okay, I just, as long as they let you do candles, because I stopped reading lines a long time ago. Okay, where are we? Okay, here we go. So, I wonder if they'll let me draw on here. They will let me draw. I love it. I love it. Well, it says it'll let me draw. There it is. I'm sure, like it says it'll let me draw. And what I'm drawing. This is Fibonacci retracement. I didn't want that. I just wanted my. There you go. My horizontal line. All right. So this is, and it doesn't, it has the candle, but it doesn't tell you what interval we are in. All right. So this is the day. So this is even Mother Stride. All right. So check this out. January 17th, we have a red candle here for the most part. I wonder if I can zoom in. See if I can zoom in for you guys. Maybe. Let's see. Let's see. All right, yeah, we're gonna have to talk through this. It's not that deep. All right, so let's get back to it. So, okay. So January 16th. Where is it? Oh, no, it's January 6th. Okay. Yeah, so January 6th, 2026, ironically, we have a red candle, and this is for the day interval. What do we mean? We say intervals, it means this is for the trading day, this evening an hour. For that day, the entire day was red. It went down, shot down all the way to 118 from 125, almost $10. So that whole day was red. That was a red day. Very next day, for the whole day, didn't go down far, but still was a red day. Probably dropped from 118 to maybe like 118, maybe more like 116. Red day again, 2 days in a row, red days, right? You're like, man, the market just must be doing horrible, must be about to do horrible. From there, on a daily market, and it didn't even fill the gap. What do we mean we say fill the gap? January 8th, it didn't even raise above the high of January 6th. So for people who, when you look at this from a I don't think they're gonna give it to me. Okay, they gave me an hourly. Why they won't give me a 4 hour? Won't tell me they being difficult. Okay, and they ain't gonna give me a 4 hour. All right, that's cool. That's cool. But then if you're gonna give me an hourly, my guy. All right. For the sake of the example, for the sake of the example, we're just gonna stay here. Okay. It took literally. Now let's say you're a day trader. If you are a day trader and you're like this hasn't rebounded, if you didn't get the direction right, and it hasn't gone above 125, it didn't break that ceiling until almost a week or 2 weeks later. That's a long time because the chart that I have up that you're looking at, these are day candles. These are full trading days. Hey, red day here, red day here. So started to rebound from its lowest low. That's what the green candle is showing you. It started to rebound from its lowest low, didn't break through yet. Another trading day. This might have been a Friday. And then that Monday morning on the 14th is when it started to really break away. What you really start to see is by next week, I think maybe the 15th is the following trading day. Let's I don't have the what's the name on me, but that following Monday, you start to actually see the trend. So you have to wait a few days, right? Now, if this is an entry and you're swinging, you're cool. But if you're day trading and you get this direction wrong, it's just looking bad for you, period. Can't see because you only see red. You only see red, right? And my main point of bringing this up as far as like the global war is an influx in raising oil because industries that are deeply impacting the countries that are deeply impacted by oil, the U.S. and foreign countries, now it's a battleground. There's no regular in stream of oils flowing from the left to the right. This percentage is getting, this country is getting this percentage. Now there's a hope in the way the world economy is working. So the market for some, so I'll give you another example, right? So Exxon looks great. It's going up. They're like, man, it should be great. It's going up. You want stock to go up. You want the market to go up. If you're trading as a call. But if you have a put, and put is going down, that means you put a put on this option or Exxon in between January 1st to January 14th, you are losing money the entire time. Because the market for this stock is not trending in the direction you want it to go. Or you believe it's going. Now, let's go to Visa. Visa, on a day-to-day, let's go even more recent. All right. Since February, it's not rose and even broken below 115 on a day-to-day. But if you expected Visa to operate how it did even in January 20th, it was got down to 320. Okay, cool. Shot up to 334. You're like, oh, okay, cool. Visa steady. It's going up. You're swinging it. Bet. Because it's high. Like the month before, it's 350. So you're like, okay, cool. It looks like it's going to rebound. Broke to the other side on your call. You're not making no money, right? A lot of volatility and uncertainty. Again, this is going down. So if I have a call in this, I'm losing the money. Okay. That's just a deep dive on when I say it just depends on where you are in the market with the market sentiment and what's going on in the world. Not every trade is going to look the same. Not everybody's market is going to look the same. It's because of because of everything that's going on, right? So now let's get into it. Yes, it can be confusing. Trading and investing based upon your experience can be a lot. But let's talk about like wins that you can have. So wins that have been in my portfolio from a year to date or a year round. My wins in Apple, I was up 32%. Wins in Microsoft, I was up 18%. Wins in Palantir, that was one of the most recent trades. I was up 20% year to date, so year round. So from last year, as far as my trading wins. And I think this is American Airlines, AAL. My biggest loss is honestly, I can't say Netflix yet because I haven't exited fully out of Netflix. It may rebound, who knows? But I may just have to let that go, to be honest. But yeah, MicroStrategy over 80%. Palantir was over 60%. This year was my biggest year of stop loss rules, 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 rules. Um, and here's why: because the market isn't it's not what it's normally looking like, right? There's global interest rate policies that are affecting central banks around the world, are rising interest rates, and we're fighting inflation all at the same time. Countries like the U.S., United Kingdom, Europe Union, Canada, people with just higher interest rates means what? Borrowing becomes more expensive. It's heavy on the dollar that you're trying to incur, and the interest rates on the back end. So if I say, hey man, I really just want to borrow $1,000 from Bank A is like, sure, I'll give you $1,000, but by the term of this loan of next year, you're going to owe me 2,200. You know what I'm saying? Like, you're going to owe me 2,200 just so you can get this $1,000 today, which means what they means when they say borrowing becomes more expensive, business are slowing down because money is not fluctuating, because money isn't becoming as much of a luxury at this point. The stock valuations are just, they're going here, they're going there, they're compressing. It's wild. Then you have the capital shift, AI and technology shift. I spoke about this in last episode, but companies are spending hundreds of billions of dollars on artificial intelligence, on cloud computing, data infrastructure, and automation. The biggest master shifts in this capital and the biggest companies, which is going to be a plus for you, is NVIDIA. On the long-term play is Microsoft, is Apple, and is Palantir, as far as public knowledge, right? Now, markets are rewinding and becoming more technologically led. But what does that mean? When something's led in one sector, other sectors are not getting that same push. So, and going back to like the wars, the war in Iran, and just the geopolitics, which impacts world economics, geopolitical instability, right? Conflicts create trade tensions. They impact the oil supply, manufacturing, global logistics. Some examples um, were the Russian and Ukraine thing, as far as that incident, the Middle East incident, the China and U.S. technological race. Like, these things are drawing in, saying that we are in competition or we are in disagreement. And the world is saying, oh, the world leaders are in disagreement. The race and tension with your money is everywhere, right? So the increase in certainty creates market swings. And if you ain't catching the right market swing, you suffer, where you get the 60% loss, the 50% loss, and so forth and so on, right? Now, top three global economy impacts, right? First impact is just the amount of volatility. What is volatility, right? It's the market's green one day, market's red the next day. Market's green this day, red the next day. That's volatility because there's no steady current, right? The market's reacting faster than they ever do. The algorithm and trading algorithm is not steady. Stock markets are moving 5% to 10% quicker. Second impact is capital concentration, right? Money flows heavily into the Mag 7. The Mag 7 are Apple, Microsoft, NVIDIA, Amazon, Google, Meta, and Tesla, right? And they're holding market dominance. They're holding market dominance. And that's why when NVIDIA doesn't break its earnings on all sentiments, the market and even the stock itself shoots down. That doesn't mean it's going to stay rebound, but if you were in that trade for that day thinking that you're playing earnings and you go for a call from NVIDIA to shoot past 200 and it shoots back down to 180, see what I'm saying? The third one is labor and productivity. AI and automation are replacing certain jobs. And if people are out of jobs and the job market is becoming affected to people who you want to spend money with you, depending on what industry and business you're in. It's not happening. If I ain't got no job, or my neighbor ain't got no job, I'm not going to Apple. I'm not going to, um, Walmart is as much, right? I'm not going to Best Buy. I'm not going to, Gifts, Macy's, and all the other stuff, right? And companies are investing in machines instead of payroll. That's going to impact everything. The boosting corporate profits, but they're reshaping employment. These things are big impactors in the market's volatility. So, uh, U.S. economic factors that are driving the markets. Federal Reserve's monetary policies. Are they going to do rate cuts this year? With the replacing the old Fed chair? Who is this new person that's coming in saying that you're going to be running the money? How you going to be running the money is what people with money is saying. What you talking about? You one of those, you out here for the people type of people that's running the money, or you out here you supporting business and overall capital growth type of people that's running the money? We want to know, because we people with the money is what they're saying, right? And then how much money is you supplying? Like, can we, as a quote unquote, as example, can we as an airline industry depend on you to bail us out if things go left, and we just need the funds to continue to run? Can we depend on you, right? Liquidity in the financial markets. Are you locking up my accounts, or are you giving me the grace to pull massive amounts of money, right? So when the Fed raises rates, what happens? Stocks become harder to justify their highs, right, and their valuations. When Fed cut rates, stock often rally, right? So when we get rate, that's why we're like, yo, we got a rate cut. Yeah, I'll bet money's coming, right? The ease, it doesn't cost me 30 to get $10 from here, type of thing, right? And what trading is really, okay, so defining trading clearly is just short-term speculation on price movement. That's basic definition of trading. Common tools that are used in trading are option contracts, day trading, swing trading, or futures. Throwing it in there. An example of my personal examples of um, options or tradings that I'm doing is that I have an 85 Robinhood call and 89 Robinhood call currently that I probably will be exiting because of the market shifts. You have to sit in the reality, not where you want it to go, even though in the long term, I foresee as a leap, Robinhood is going to get past $100 going in 2027 for sure. The products that they have coming out, they are competing with the other top brokerages and hedge funds out here today. Vlad is doing an amazing job running his company and giving a lot of accessibility and wealth growing tools to retail people, right? Because I watched his product drop, and he gives a lot of opportunities for life-changing things. And he's the Mr. Beast of finance. Just gonna be honest with you. That's what he is. He's the Mr. Beast of finance. But what do options do? So as far as when you hear me talk about options allow traders to control large stock positions with small capital. And they can't all trading comes with, let me say this. Anything that you hear me say on my show is strictly based on my opinion. This is not financial advice. I'm not a financial advisor. I'm just a financial advocate, leader, who gives my opinion on the way the economy is shifting with the everyday people as an everyday man. Because every trade comes with risk, right? Some form of risk. Why options lose value? Options lose value through time decay. Theta. Theta is the Greek word. That's your biggest impact. Even if the stock stays flat, the option price slowly drops because it's not moving. So if I only have this option contract for a week and Apple will stay flat the entire time, it's not getting to my break-even price, which is not getting to a profit price, which means that if it's not getting to a profit price, I'm losing money because I'm assessing, betting that it's going to go up. If it's not, I'm in trouble, essentially, right? The realities of trading, right? So the realities of trading, bro, you can take some losses. You're gonna take some losses. This happens. My MicroStrategy was a loss. All my technicals didn't. It happened. Um, and understanding that these things can go to zero, which is why, uh, we harp on stop losses. But a lot of the times, here's the reality: when you're sitting there, that's why your discipline is so important. And I had to battle with discipline for a long time as a trader. That's why I would say I'm an investor first. Because my money's growing on the back end. I can see it in my Roth IRA. I can see it in my long-term portfolio. When good news comes out on the long term, it's there to grow money on the back end to give me some form of a cushion, right? Still, when you're trading, that's different though. Netflix trade is another example of the realities of the losses that you can face, right? So, Palo Alto, right? The cybersecurity stocks, they moved heavily because of earnings, sector rotation, and interest rates. But here's what I do want to say: there's power in investing. There's power in the market. There's power in wealth creation. You have to believe that first. No world is perfect. None of this stuff is going to be perfect. But it does have possibilities to impact your life for the better. That's the truth. As an example, so are my winners. Apple, since I've been trading, up 32%, right? Global customer demand, economical locked-in system, service revenue, Microsoft, enterprise software, cloud computing. These are the pluses that are happening in this industry, right? Palantir, right? Government contracts, defense data intelligence. Like these are the pluses. That is the reason why it's up 21%, versus the time that I've been trading over the year span and I made money off of it, right? And I've shown that I made money off of it. I think it was Uber, right? Uber was an example when I first did the 1K challenge. Percentage showed you that you can make money off of it. There's no cap. None of the things you hear me say, whether it's successful or not, is cap. None of it. I've literally shown you with my own money, you can make money. And not with big money. $250. There was some $500 trades in there. There was maybe to $1,000 there. The biggest I threw were a couple G's in there at an option, but like period. I didn't say, yeah, you need to throw 8 figures in the air to change your life. No. Shoot your shot, though. I've seen it work with my own eyes. Shoot your shot, man. The main thing I'm saying when it comes to investing in trading. How are we navigating this economy? So this economy currently, yeah, man, you separate trade and money from investing money, right? Investing money is wealth building money. That's what you have a separate account for investing. I have to tell people like, bro, what are you doing? If you're trying to be a trader, we're going to give you a completely different set of information and thought process. If you're trying to invest, very simplistic way. You can go to you don't need to go to I'll say it like this. The best suggestion in society today is to go to a financial advisor if you don't really do anything. I do the main thing, which is why I don't go to a financial advisor in depth, right? I may ask some questions if I want to go into deep details about the best tax incentives, and I'll go to my CPA for deduction. Like I'll go to specific people if I don't have great area expertise. But if you're talking about in general, I know where I'm going and where I'm placing my money as a whole. If I want as an investor to grow and create wealth, trading completely different conversations we're having because we're speculating opportunity and we're going off of what has happened recently. What is the revenue like? What can go bad that impacts this globally, in the country, microly lawsuits? Like, what are the things that can make my speculation be wrong? That can say they're going to cut dividends next week or whatever the case in whatever country because they're getting sued for whatever reason, right? Or the app that is ran by Oracle is getting cut off. So now Oracle's losing a fan base and Oracle goes down as speculation, allegedly, right? Just throwing that out there as an example. Yeah, so that's rule one. We're gonna talk about the rules. Rule two, follow structural trends, man. Don't let your hope lie to you. I'm talking from experience. Don't let your hope lie to you. Strong sectors like artificial intelligence, cloud computing, cybersecurity, fintech. If the trend is telling you it's a bear, it's a bear. If the trend is telling you it's a bull, it's a bull. If it quack like a bear, it float like a bear, it's a goddamn bear. Okay? Depending upon what stock you're in. And then yeah, control your risk, man, when you trade it. In this market, we might go 5 to 15 if it ain't running. I ain't even finna hold you. 5 to 15. If you really don't got like all the money that you're rich, should be money that you should be okay with losing because it is what it is. But if you are trying to create a set of cash flow, protect the money that you use. 5 to 15, it ain't moving where you want it to move. Cut it. Cut it. And if you listen to this by the time this comes out next Wednesday, and let's say I would say start on a Monday, look at last week's, look at last month's, look at last year's, look at the 4 hour, look at the hour on Monday morning when it opens in whatever stock that you're in. The hour, the 4 hour, the day, the week, the month, and the year at least to get a scope of how the company's been overall doing for the past year, 4 quarters in a year, earnings. You know what I'm saying? You can look at the chart and speculate outside actually reading the charts and reading the information. They'll tell you like, hey, they have positive earnings. Even Robert tells you earnings were up from their expected. They passed their expected positive earnings. Positive earnings didn't beat earnings, so forth and so on. Revenues running. Yahoo Finance will give you like the market cap and that information. And then when you go into like the daily and hourly charts, hey, how has it been trading? What have the people with the most money been saying on their belief in this company? That's really what you're staring at when you're looking at charts. It's the people who are putting heavy sets of money in where their belief in this industry or the stock is going. So if it's in a bear trend, if it's going down, there's not a lot of belief, especially if it's a company that usually holds strong and trends up. What it's saying is the heavy hitters in today's economy do not believe that this is going to be sustainable because of their future fears of uncertainty in the market, wars and all this other stuff. So that's what that is. Yeah, man. So, and with that, like, I want to say this: one bad trade should never destroy your portfolio for sure, but one bad trade, 2 bad trades, and even 3 bad trades, if you love this and you want to be a master and you want to be successful at this, shouldn't destroy your confidence in the market, especially if you've seen it work. It didn't work those times. But if you've seen it with your own eyes, you doubled your money. You're able to pay a light bill, pay a phone bill, pay a bill from trading. Don't give up if you get a bad trade. It's all right, man. And lastly, this forms of philosophies that I have and I carry with me, man. Trading can make you money, for sure. Trading can make you money. And I don't think I'll ever stop trading. But even when I'm gone, my family structure, we're going to keep investing, because investing is what created the wealth to sustain my family. Trading is about timing. I mean, when you entered the price, timing of when you entered on the price of the money in the direction, timing mainly. But investing is about owning and creating generational wealth. Smartest people in the market, we understand both. We get it. That's why we can tell you there's a difference. If you tell me, oh man, I want money to grow, what are you saying? Let's be a little more specific. Are you trying to invest your money, or are you trying to trade? Two different things. Outcome of growing a dollar, same, yeah, but two different ways. So with that being said, man, I'm your host, Marcel, the Wealth Mentor. Hopefully you learned something. We dissected a stock or two. I went through the philosophy of trading and investing, and where you really stand with this market. This current market, there's a lot of volatility. Cut your risk to reward. And if it looked like a duck, if it looked like a bear, and it quacked like a bear market, it probably is a bear market in the moment. But definitely pay attention to the specific stock you in, what you're trading, and what's impacting the direction of the stock if you're trading. Now, if you're investing, understand the long-term impact and the direction of the companies you're investing in, because that'll let you see your overall growth. An example, I invest in NVIDIA. Have I traded NVIDIA as an option? Yes. But I invest in NVIDIA because I believe in the context of this is going to be a pivotal part of the world's economy in the future. This stock overall as a company will grow, improve, and this is going to be like worth X amount of money. So let me get in now because I'm investing in my future. Straight like that. With that, man, hit the like button, share button. I appreciate y'all. Everybody that subscribes, it's Marcel Griffin, founder of Griffin Speaks, man, the wealth mentor. And this is Wealthy Sibling, man. Hopefully all this information does lead to you changing your family's money story. And we appreciate you each and every time. And it's episode 25, going towards 100. Let's go.